Hello, everybody, and welcome to today's Prop Moto webinar. Excited about this one. We're going to be looking at the outlook for multifamily real estate in the second half of 2025 here. Obviously, it's a complicated landscape that we're getting into. There's a lot of different forces pushing, and so we're going to talk a lot about what's going on in multifamily, in the economy, human migration patterns, property management techniques. We're going to get into a lot of different topics, and hopefully it's useful to all of you. As a reminder, we're not saving time at the end for questions. We will just be taking them as they come. So if you guys want to jump into the chat box here and ask a question, please go ahead. As long as they're pertinent, we'll try to bring them up mid stream here and answer any questions you have. We have some really interesting panelists here that have lots of experience, so they should hopefully be able to bring that to bear on any difficult questions you have. So let us have it. So without any further ado, I'd like to introduce our panelists. First, we have Ariana Rozansky. She's Vice President for Regional Operations of Multifamily Property Management at JLL. Hi, Ariana.
Hi, thank you for having me.
Yeah, thanks for coming on. Back again, we have Haniel Lin. He is CEO of Kastle. You guys probably know of them from their back to office barometer that has become so popular. Hi, Haniel.
Hey, Fanta, thanks for having me as well.
Yeah, thanks for coming back. And first time on the podcast, we have Jay Levick. He's Senior Director of Market Research at Continental Properties. Hi, Jay.
Hello, great to be here.
I always like to start these with the state of the market. And obviously, this is going to be a big one since we're going to be talking about a lot of the trends happening in multifamily. I'd like to kind of maybe cover some, if not all of them. Like I said, there are a lot of different forces pushing multifamily in different directions. So, kind of want to hear some of your ideas around these. I think the first one that comes to mind for any market is obviously supply and demand, right? And we don't have to get into each market, but I would love to maybe touch on a little bit of, what is in demand and what that looks like. And, is supply keeping up? I think, for a long time, there's been not been a lot of building, honestly, unfortunately, for people that are looking to get into affordable, accommodations. But I think we're starting to see it ramp up in some cities. So, maybe Jay, I'd love to start with you here, just a little bit about what you are seeing as far as when it comes to supply and demand of multifamily.
Yeah, we hit a 40-year high in terms of deliveries last year for multifamily units. The last time we saw this many multifamily units was back in the mid 1980s. So, the increase in available units has definitely been there. We've seen that in terms of the vacancy rate rising. And the other thing that's kind of important to point out is that a large amount of this supply additions have come in Sunbelt locations. So it's Phoenix, it's Austin, it's Nashville, it's Atlanta. These are, the areas that we've seen, just huge amounts of new units coming online and cranes still, dotting the skyline. And so, that's one thing that we've definitely seen. I mean, the flip side, though, has been that we have seen rents going negative in a lot of these Sunbelt markets. That there is demand for these units, but the supply has definitively been outpacing the demand. Now we saw that flip at the end of last year in the fourth quarter, and then we saw demand outpacing supply in the first quarter of this year. And there's definitely a trend in which the new construction starts are coming down and the number of units under construction is coming down. So the supply is going to start to pull back, but there's a lot of available units right now that have to get filled up.
Yeah, it is fascinating how the supply is coming to places that maybe don't really need it as much, right? The constrained cities, the New Yorks, San Franciscos, maybe don't have as much supply as they need, where others, certainly do. Phoenix, I think, is a great example of that. Haniel, I know you guys see a lot of data as far as, where these, units are and how occupied they are, right? So what have you seen as far as the multifamily market is, where are some of the strengths and what areas might have, maybe starting to have an oversupply?
Well, yeah, so we track all of the national markets, of course, and I don't know that I'm gonna be as great with the data and the specific starts and stops and the supply and demand as Jay might be, but the things that we watch out for on our end would be the classes of real estate and or the types of real estate and the types of assets and properties that people are moving into. And there is this whole thing we always talk about on office side and on the multifamily sides as well around like the quality, around what you have to put into an asset or into a property to be able to attract people, to be able to attract residents and earn above market rents. And so what we find is where the investments have been made to create more attractive assets and more attractive properties and communities, they tend to be able to draw more people into them. And so, and I'm curious if Ariana finds the same thing, but the levels of investment then typically drive folks to come in, where the more commoditized spaces may have less demand from what we see in our data. But certainly I don't have the breadth of economic coverage across the markets as Jay might or others might. The other thing I see is by certain geographies, you do exactly as you said, Franco, find that we're seeing a lot of assets coming to the bigger city markets and then developments coming into some of the South Sunbelt markets as we're describing them before, talking about before. And that growth is certainly changing the supply and demand balance as we have it. But those are all things that we're watching right now, and where people are putting money and where people are putting investments and where people are trying to attract the demand that they might otherwise not have gotten.
Yeah, and I'd love to chase that down a little bit. That idea of quality, right? What is quality when it comes to this market, right? What are kind of multifamily, renters looking for? Ariana, what do you think as far as that goes? Is it location? Is it newer buildings? Let's try to define quality here.
Yeah, well, location always plays a factor, right? I think, we all hear the theme and the motto is location, location, location. So, that is absolutely paramount. But I think for, in terms of what renters are thinking of as quality, it's certainly elevated finishes, right? But I think what we're seeing is this, much more focus on what is offered outside of the unit. In many of the markets that we operate in, and really what we're seeing nationally is having amenity spaces that people can not only work out of, but also see themselves living in, playing in, making more of a community and more of a neighborhood feel around that. People want to be able to work outside of their apartment. We do have a lot of people still working from home or sort of having a hybrid schedule between going into the office and not during the week. And so they want somewhere that they can be in a common space, doing their work, still be part of the action, but feeling still like they have, a little bit of privacy. Co-working spaces, individual, offices that we're seeing that we're building and seeing at the properties that we manage, those are getting a ton of use. I mean, you walk in at, 10 a.m. and almost all of them are filled. You walk in again at 2 p.m., all of them are occupied. And people still want that basic. They want to feel comfortable when they come home. They want to feel proud to come home to something and be part of their community, and still want a management team, that's approachable. I think if we're looking at, sort of kind of dividing up, all of these demographics, I think it really also depends on where you are in their life. Maybe somebody who is a new college graduate, they're in their first apartment, in-unit laundry is going to be a huge sticking point for them, right? Something that they're looking for that's at the top of their list. Maybe a less, less price conscious demographic is, the people who maybe this is their second home, they're pied a terre, they have multiple homes and this is maybe a third for them. They're coming from a very elevated style of appliance packages. So they're going to ask, well, what appliance packages do you have? What does it look like? And, I think that we're sort of, continuing to kind of see these trends and also then manage, to them as well. And I think in markets where Class A already exists or has been around for a while, you know, those expectations of that elevated finish, that kind of community feel, that luxury aspect, those have already been established. And, you know, in areas like cities like Milwaukee, which I'm from here, I can talk about it. You know, you only still have certain number of properties to choose from. It's a little bit newer. There's some great things happening in markets like this, but this Class A product is still pretty new to the market. And so that's where, you know, we certainly like to spend time as well understanding that.
Yeah, those are great points. I'm also interested in kind of size, right? I think when the pandemic happened, everybody thought they needed you know, an extra bedroom for an office.
Sure.
Seems like now people are maybe okay with you know, part-time at a co-working, right? Do you still think that that's a big driver, is having an extra bedroom, or you know, or is it okay kind of shrinking some of these?
Yeah, I mean, I think again, I'll start national. You know, smaller units typically perform better. They certainly have to be the right layout, and if they are an efficient, great floor plan. You don't necessarily, you know, square footage doesn't necessarily matter or is better versus, you know, more efficient, maybe smaller on a per square foot, you know, basis than others. Are, you know, convertibles, again, across the board, as long as you have a plan that's laid out really well, they typically perform extremely well in a market. And on your per square foot rent basis, they're pretty consistently performing in our sort of top tier when we're looking at how, you know, unit types across the board perform. One bedrooms, sometimes the larger the unit, the harder it is to rent. So, you know, as long as the plan is laid out right, they perform extremely well, and people are happier and okay going, you know, they may come in looking for a 2-bedroom and then see a 1-bedroom. And they're like, well, actually, this could work for me. You know, in markets where we see the demographic is not as price conscious. So, you know, we have properties in South Florida. We typically see that demographic is not as price conscious. You know, 2-bedroom units are in higher demand. And we typically see people that, you know, don't necessarily come in wanting a certain layout. They'd like to look at a couple of different ones and really make the decision based on how it meets their lifestyle, and how they're going to live in the unit. And that drives their decision.
Yeah, and I want to just jump in really quick and make what I think is a really good point in terms of the types of households that are demanding rental today. And I think sometimes this gets lost in the industry, and that single people are the main driver for rental units. When you look at the data nationally, 50% of all people who rent in a multi-unit building are single. I was on a panel a couple of years ago with a colleague of mine from Greystar, and when he looked at Greystar's internal data, the number of singles that they had in their portfolio actually increased. It was in the low 60% range. So this perception that, you know, so, you know, you think about the size of the pie, and, you know, that singles make up 50 to 60% of everyone who's coming in and leasing. I mean, to me, that's, you know, falling into the category of, you know, 1-bedrooms, studios. You know, would a single person rent a 2-bedroom? In some cases, maybe, but I think, again, it's like you go to where you think that household size is going to go to the most. And I think it's kind of important in the industry and in the sector to remember that singles. This is what drives our sector. This is what drives our industry and drives that demand.
I'm curious, how do you guys think about how the back to office dynamic affects that? Because if I can imagine that if you're in a family, maybe that's the other 50%. And maybe Ariana, that's why you're suggesting or saying that some folks are building co-working spaces around that, or live or play spaces. You're trying to get out of your house to go to work, but not at work, but at some, you know, proximate place around your house.
Okay.
And so if you are a single, then are you just staying at home? And maybe that's okay because you're not bothered by distractions because you're the only person there. Or maybe you're just say, so I'm trying to get out of my house because I need a separation between live and work.
Yeah.
Even I'm not going to work. And we know from our back to work barometer that number on average is around 55% right now. You're working then at home 1 minus 55% of the time. how are you managing that in your lifestyle, and how are people designing communities to accommodate that now in this new future?
Yeah, absolutely. It's a great question. And I think it goes back to, some of the items that I pointed out with the amenity spaces, right? We're seeing many developers, creating individual office spaces on top of, public areas within the building that people can work. But these are offices that can be private. So if somebody has, again, video calls, Zoom calls, or just, again, wants to be out of their apartment, but still feel like they're part of the action of everything that's going on, outside. They still can have sort of the best of both worlds in that way, where they're not, in their apartment, cut off from everyone else. They're outside in the amenity space. They're using that amenity. They can see what's going on outside, but they still feel like they're in a private space. And then I think it goes back also to how you're programming, the community. And that really falls on, management to understand what our residents want. They'll tell you, they'll tell you they like something, they'll tell you also if they don't like something. And so you really can sort of curate your program to what they want and, how they react to things. We do, security and kind of crime training at some of our properties. And, we sort of take stock every time of, okay, was it the time of day? Did that maybe not work? Should we push it? Should we make it earlier? What works best for people? Dogs, pets, those are a huge part of our demographic now. So it is in your best interest as a management company to curate events that are specifically for dogs. We've seen time and time again that if residents, form relationships within the community, they are a lot, there's a large percentage of them that will end up renewing because they've built this community, they've built this neighborhood within their building, and they don't want to leave. And that's sort of that stickiness that we find this demographic looks for as well.
And dogs, I'm going to just throw a couple of statistics out really quick. I was just at a property of ours on a property tour. 40% of the units had a dog. 10% of the units had a child. So, I think that's a very, and we will build in our communities, we put more focus now on dog parks than playgrounds, which I think is exactly the case, which is very important to think about. And, this, to me, what also comes up is this other idea that, there's a perception that multifamily attracts families, but the data actually shows that that's not the case. As I just said, only 10% of our units in this one property that I was visiting, which was in suburban Chicago, had children, and not all of those are of school age. Some of them could be younger. Statistically, on a national basis, according to the census, about 20% of families that live in a multi-unit building have children. The rest are, as I mentioned, singles, married couples without children, or some type of roommate non-family situation.
Yeah, I know one trend that has been brought up mostly when talking about kind of residential real estate, but I think is super pertinent to multifamily, is that household creation is getting pushed back, right? People are starting families later in life, buying houses. I think the average age of a home buyer now is, maybe 10 years older than it was 20 years ago, let's say. So, do you see this as a tailwind for multifamily, right? Do you think that will be something that will continue, and and maybe which markets are the most likely to benefit from something like that?
Yeah, just really quick, I'll throw out some numbers on that. So, when you look at the number, and this is based on a great study that was done by the Pew Research Center, the number of young adults living with their parents today, it's come down slightly. It peaked in 2022 at about 52%. It's been trending down slightly, but it's still very elevated in the high 40% range. And just to give a kind of a reference for that, in the 1970s and 1980s, when the baby boomers were coming of age, that number was 30%. So if you do a quick back of the envelope kind of calculation, it's about 9 to 10 million young people today still living at home with a parent, compared to, going back to when the baby boomers came of age. So that's a huge, in my view, I mean, just a massive amount of potential pent up demand for housing that the market has not experienced in the least.
Yeah, I'm sure a lot of those kids would not live with their parents if they had a better option, right? Obviously, some would be fine with it, but yeah, I think that's a great point. Haniel, I'm going to throw your question back at you, but in a different way, right? I think I'm really interested in this kind of interplay between office and multifamily. And I know that when you look at, the kind of return to office, it's not across the board, right? There's some cities that really do stand out as far as office occupancy. New York, Texas cities seem to be leading the way versus, the San Franciscos and Seattles, which still have, pretty historically low occupancy. Do you think that affects the multifamily market, and how so?
Yeah, certainly. So lifestyle has to change if your work style, your work requirements are half in the office, half not in the office, right? So you're just spending more time at home. And to what Ariana said before is just by spending more time, you care where you live. You care where you live / work. And so the elevated finishes, the live, work, play environments, I want to be able to get out of my house or my apartment so that I can be in a commercial area, so I can get lunch. All of those things end up being more appealing in the totality of the design. And I'm noticing here, it's like I'm sitting in this background of the wharf in DC, and it's a great development, and it's beautiful, it's wonderful. Hoffman did a great job with this in what are restaurants that are there. There's nightlife that's there. There's restaurants and hotels and office buildings around the multifamily apartment units. And it's awesome, right? And so as you think about how that has to factor in design, and then also, as Ariana said earlier, as you factor that into what are the amenities that you're building when you're at home? How do you think about the co-working space that you might have inside your building or close to your building? Or how much you might be able to provide access to co-working spaces down the block or the gym, because you're going to be at home working out more often than you're going to be traveling to your office, and then the gym next to your office the gym next to your office when you go to work. All of those are factors that have to come in as you think about designing for lifestyle. And so I think that you can't help but see that I think is hybrid is here to stay. And then what do you design for, and what do you think about in the whole life cycle of a person from morning to night?
And I guess the flip side of that would be, places with industries that do, or cultures that do have more kind of in office, that they might be more prone to location, right, than the fixtures, right? They want access to transit, being easily accessible to your office, and then maybe, less important that it has, the nicest fridge or faucet.
Yeah. I think when we track back across the whatever 5 years of COVID now, what surprised us is to what degree transit affected whether people came in. And so in the beginning, the car economies like Texas came back faster than the mass transit, like New York or even Philadelphia still is a little bit depressed right now with respect to back to the office. But the easier you could get back in the office and feel safe doing it, the more people came in, right? And so transit, I think, is a big part of what drives your life, so to speak. No pun intended on that one. But it dictates a lot of how much you spend in time, how much you want to go to the office, what happens in the office. And so the easier you can create a transit map, I guess, of getting somebody to go easily from work to home and back, or home to work and back, I think the easier it is for you to attract somebody.
Yeah, absolutely. I'd love to talk a little bit about just the economic outlook, right? Obviously, this is an important driver of rent growth. There's a lot going on here, right? We have tariffs that seem to be kind of on again, off again, plus the interest rates that everyone's kind of worried about. When it comes to the future of the economy, which factors do you think are really going to impact rent growth, and maybe what areas or types of properties do you think that is kind of the most affecting? I'll start with you on this one, Ariana.
I think, and again, it's something that, we are monitoring, at all of our properties and really nationally as well. I think that, there might be just a change in, people, maybe taking a little more time to make a decision. Again, multifamily, it's a personal decision, it's your home. And so I think, we, are sort of looking at, are people going to sort of jump quicker or make a decision quicker or really weigh all of the, kind of financial aspects of their choices before they, before they commit? Will they come in looking for a larger unit and choose a smaller one because from a financial perspective, it's a little more economically feasible for them right now, and then maybe upgrade later on? So I think, that's a one that sticks out for us.
Yeah, that's a great point where it's like the fear of it, even if we haven't had the kind of economic downturn that, just the kind of expectation, I think, a lot of kind of sitting on people's hands. Jay, what do you think about that?
Yeah, I mean, I think that as a economist by training, I think we have to always remember that sentiment and confidence matters significantly. And when in 2021 we saw record demand for multifamily. We went into 2022 and demand basically fell off a cliff. Now we knew that we weren't going to see the same amount of demand that we did, the record that we saw. But I mean, it was really, really tough from a demand perspective. And I sat for many, many hours going over trying to understand what was driving this. And after laying over many, many different data points, the one that all of a sudden jumped out to me was consumer sentiment. And you saw consumer sentiment in 2022 drop even lower than we saw during the great financial crisis. So this is, something to kind of always keep in the back of our heads, and that sentiment matters. And when we think about what was happening in 2022, we had oil prices spiking. We had inflation at the highest level since the late 1970s, early 1980s. We had the potential of a war breaking out in Europe for the first time since, the 1940s, which, that ended up happening. We had major corporations announcing massive layoffs. We had business leaders going on CNBC every other day saying, I think the United States is in recession, yada, yada, yada. All of these things were making consumers and people go like, "Ooh, wait a minute. What do I want to do? What do I want to do?" And so for me, that is like right now, one of the best barometers to kind of keep our eye on, because that's what makes people go, "Hey, I feel confident right now to go sign an apartment lease. I feel confident about going out and buying a new car. I feel confident about, doing anything that involves spending money." And so to me, the uncertainty that we have that is currently in our economy is a huge downside risk. And gosh, I just would love anything to just like, hey, stop the uncertainty.
Yeah. I as not a trained economist, I have to say that start with saying that. I totally can see the sentiment effects of what's going on in the broader economy. And everybody thinks they make decisions on the stock market or whether it's going up or down and all the uncertainty, as Jay said, for sure. I do wonder, though, on a more macro basis, interest rate environments do still impact whether somebody can buy a home. And so the disparity, the elevated home prices then relative to renting a home has got to push something towards renting versus buying. That has to exist out there. And then
well, let me interrupt for a second.
Yeah, please. As a chain economist, it'll help me because I'm just making stuff up.
I know everyone loves talking about that buy to rent delta.
Yeah.
The Chicago Fed did a fantastic study a number of years ago in which they found you are most likely to buy your first home 1 year before or 1 year after you get married.
Mm-hmm.
Marriage is the real signpost in the ground of making that decision to buy a home. Let's think for a moment. What's happening to marriage rates in the United States right now? Which way are they going? Down. The decision to own is one that I think perplexes people, because a lot of people think that it's an accounting question, or in terms of rent to own difference in interest rates. To me, it's much deeper than that, and you have to kind of look at, again, the underlying dynamics of the demographics of our nation. We have marriage rates declining, we have birth rates declining. We have, if you go back 60 years ago, the largest household type in the United States was a married couple with children. Today, the largest household type in America are singles and married couples without children. Why does that matter? Because, as I mentioned earlier, household type, different types of households demand different types of housing. So we have a situation today in which we have the largest amount of singles our nation has ever seen. So in my view, it makes complete sense that there's a lot more demand for multifamily. And even if interest rates were to go down, to me, I always like to try to football. The housing market is not a zero-sum game. People aren't sitting in apartments salivating at the idea of going and buying a house. That's not the majority of people who are renting today are renting because that's their preferred type of housing to consume. And, I know it kind of flies in the face of a lot of people's thought process, like, oh, interest rates will come down, everyone's going to rush out and buy a single family home, buy that home. A great example of this was when we were coming out of the housing bust. Home prices were incredibly cheap. Interest rates were incredibly low. We did not see a run, and it was actually more expensive to rent at that time than it was to buy a home. But we didn't see people rushing into buying homes because homes were not the type of housing that people wanted to consume for the most part. So it's a little bit more, there's a little bit more depth there. I think that sometimes we like to think that interest rates and the cost of ownership has an impact on renting. They're really two, it's kind of, I grew up in Michigan, so I love to go back to car analogies. It's kind of like, there's some people who need a Suburban, and there's some people that need an economy car. And if there's, the demand for those are not, someone's not sitting there driving an economy car saying, I want to drive a Suburban, and vice versa. So there's a lot of depth there. So don't always get so caught up in that price difference and what's going on. And just really quick, I want to throw this in because I think this is a fascinating one, and I always love to get people's reaction on this. Single professional females.
Yes.
The United States today is producing more degrees to females. 60% of all bachelor's degrees today are conferred to females. Females are now accounting for over 50% of MDs, over 50% of JDs, and then when it comes to PhDs, it's off the charts. Like the females are getting PhDs at incredibly much higher rates than males. Why is that important to housing demand? Because what's happening is that we have a situation today in which there's 3 million more millennial females with a college degree than the males. Likes are attracted to likes. I think what's happening is that we have a situation brewing in our country today in which a lot of these professional single females are never going to find a mate because there's just not a pool of potential mates for them. And to me, if you want to talk about demand for housing, right there is a huge driver for multifamily demand.
That's awesome. That's so fascinating.
Great point. Yeah, I think we all can think of, plenty of examples in our own lives of, people that, single professional females. There's certainly a lot.
I think we should log and go start dating services after this.
Yeah.
I
think for a while there's a dating service that would bring single professional women from New York to San Francisco to meet the guys there because they had a glut of males. But now I want to get back to the supply side of this. We've hit on a couple points here that kind of nudge us towards the idea that maybe affordability is important here, right? The consumer sentiment is a great one. Obviously kind of weighing it against the cost of ownership, which is historically high right now. It seems that most new supply is coming out is luxury, right? That seems to be what pencils, what's the easiest. Do you think there is a case to be made for both development and investment in, maybe class B and below, workforce, quote unquote, housing that can support these people that maybe aren't ready to, shell out so much of their income to their housing? Ariana, I'm interested to start with you on this one.
Yeah, I mean, I think, everyone always needs housing. I think that's a trend that's not going away anytime soon. What I find really interesting about kind of the Class A sort of sect, and I'll get to B and C in a minute. But what I find interesting about Class A is the demographic that is living in these properties. They're easily six-figure earners. They are, and it's, and they're younger, right? We've talked a little bit about Gen Z. That is, a huge cohort of these renters that are coming into the workforce that are earning a very, very good income and, want to spend it in a nice, elevated, finished apartment. I think there certainly is there is certainly space for, the B style, but I do believe that, again, in markets where, Class A already exists, there still are those expectations for, even a Class B asset that it should perform or look a certain way to attract, a certain demographic. So I still think that there's elements of what we're finding in kind of the Class A and what people are gravitating towards that should be included, in other class assets as well.
Yeah, that's a great point. You talked earlier about the kind of things outside of the unit,
Mhm.
right? That I'm interested in, and maybe wants you to weigh in on this. How can maybe the lower tier of asset try to provide maybe an experience and maybe this is a way for them to kind of spoof this is a way for them to give some, maybe an elevated experience without necessarily having to have all of these nice finishes, right? So I guess the question is, how can kind of the more affordable housing provide this kind of experience outside without, having to kind of remodel their entire interiors?
I broke. Did you ask me? My thing broke up a little bit.
Yeah. I'm interested in your opinion on this one.
Yeah, I think there are expectations set everywhere by maybe it was Class A, but maybe it's just the way that you live and work around technology and what's included in a technology package for the home. And so they're, without doing a complete facelift on the finishes and everything like that, you can imagine putting just even a different video intercom on the front, just a very simple idea like that, instead of having the old directory versions of, keep pushing the button or anything like that. Things that work and things that feel like it's more tech forward and more modern, I think will just immediately lift up to expectation. And I think that shows up at least with expectation for everyone up and down the class spectrum. It's a question then, it's economics and how you pencil it out. And so I think there are investments that you can make like that may be modest with respect to cost, and then there are other ones that are full scale technology investments that may be everything from using your mobile phone to get into the doors, having a electronic door lock instead of a mechanical one. All of those are investments that one could make to elevate your experience. It's just a matter of what you decide you want to spend money on and what pencils out.
And do you think it can be done kind of piece by piece, or I mean, is this something where an owner would have to just, like dump in, get the new tech backbone and really invest a lot?
No, you definitely can do it piece by piece. And we have clients of ours that just start with the primer before they go into the unit door locks or before they go inside the apartment and upgrade all of the tech that is inside of it. I picked the video intercom just as one example because many properties would just have that as a front face to the whole thing without having to spend more money to go all the way through to the back. But you can definitely take an incremental approach there.
Yeah, I know an article came out recently about the importance of a mail room, right? In a lot of these units, obviously, Amazon is, become a huge part of most people's spending, getting packages delivered. DoorDash and Uber, Eats have become huge too. I'm just kind of interested in how this plays into it, right? This maybe is a seems like a small amenity, right? But having a place where they know that their packages are going to be well kept and
Safe.
safe.
Yeah, I think all of that will factor into perception of value inside of a space. But you also should think about technology not just from an amenity standpoint or a feature standpoint. There also are lots of technologies you can put in that make it easier for simpler and more economic for you to operate.
Mhm.
So you can, to the package room example, you could do it so that there's an Amazon locker effectively that allows you to get into your space and without having to staff people there. There are many of our clients that are running maintenance crews and teams and property management teams across multiple properties that are very close neighborhoods, like in close proximity, by using technology that gives them access to various spaces so that you don't have to have staff in each location. So those are all ways that you can take Class A or Class B properties and make them more efficient to run at least, and then save money and ultimately create stronger return. All there's different ways of running your space, whether it's for the top line and propping rents or for running more for efficiency, for you to generate return.
Great point. Ariana, you have anything to add on that front? I'm sure you've dealt.
I was just going to
plenty.
say, for package rooms, you can't make them big enough. I mean, truly, it is, and it's so important to have the right technology and really the right layout as well, to be able to provide almost immediate notifications to residents. And that's across any asset class. Packages are really important for people. That is how many people have chosen to get their groceries, get their food delivered, just live their day to day, right? You mentioned Amazon. I mean, it's incredible how many Amazon packages, if you just sit in a lobby, like how many Amazon packages throughout the day come in back and forth. It's amazing. But having that technology, having enough space, but also a very efficient way to organize everything is very important, because it's ultimately it affects the resident and their experience. If they can't find a package, if they get notified and then you don't have it in time, it's not good. So something to think about.
We had somebody come to us and talk about that, but from an eyesore standpoint, the aesthetics of it overflowing, and then they can't get
Right.
in, so they leave it around the side of the door, or they run out of space and then they just leave it everywhere in the lobby. That's not a good experience.
Mhm.
Yeah, it's a great point. As it becomes more convenient for people, it does create a little bit more work for the buildings, right? So to have to figure out how to do that in an efficient manner is paramount. I got a great question here I'm going to bring up, particularly because of the kind of cultural shift, maybe more political shift that has happened. Do you guys see the consumers wanting more in terms of energy efficiency, healthy materials, or other features that are considered green, right? Before Trump got elected, it seemed like this was the main talking point at any conference, was the importance of green. Now I hear a lot less about it. Is there a premium, right? That's what I think the difficulty is. Most people that want to make these investments need to know that they are going to get an ROI on them. Is there ability to kind of maybe charge more for places that are quote unquote green? Daniel, why don't we start?
Yeah, sure. So we hear from clients that is a hard thing to pencil out. I think there was a lot of interest and excitement to put more into smart home let's say, for lighting or HVAC or something like that. And it was hard to justify higher rents from what we have heard, but I'm sure Ariana has better information on this. But what we understood is it was hard to get the top line to grow as a function of it. You may be using certain applications, especially on the energy efficiency side, be able to operate more economically if you had it in, but it wasn't that the resident was, or prospective resident was drawn to the fact that you can, do smart lights or you control all that stuff from your phone or anything like that, that drew people into it. That at least is what we found anecdotally.
Yeah, I mean, I think, I'll sort of continue to go back to, some of the expectations, right? I think if, a lot of the demographic, they want to know that you've built the building using energy efficient, items. So your, low aerator, low flush toilets, the, some of the lights are motion censored, in some of the spaces that are less frequently used, things like that. Those are great selling points. Recycling, in jurisdictions that either obviously require it, but also ones that may not. Implementing that is typically gets some very positive feedback from residents. I think what we really do is we really try to use some of that data to really understand what is important to residents and what they would react to. What we're finding in many of the markets that we're operating in is many residents have cars that are EV capable or are fully EV. That is very important. So while we may not be able to, get Haniel, what you were talking about is premium on rents for things that really are kind of an expectation at this point and sort of how the building is developed and built, we find that, you can look at some other levers like some rentable items. So building more EV capable charging stations within the parking garages and charging a premium for that. People will pay that because it's necessary. It's a private parking garage. It's off the street. It gives them a reserved space. That's a premium for many of our residents.
Great point. Yeah. I think we have a general disconnect, between, especially in places where the apartment owner was going to have to pay for these upgrades, but the, apartment dweller is the one who's going to benefit, right? Because they often pay their electrical bill. I know we have written some profiles of these kind of, ultra efficient properties, and many of them seem to start to go to just utilities included, right? And I've even seen some of them have in their marketing material, right, where it has to really explain this to people, like, okay, yes, this is the rent, but this is what an average a utility bill would be, right? So you have to take that out of kind of the like-kind process for the renter. I mean, do you think that there will be more, kind of all included, utilities included rentals if we start to see more of a push towards energy efficiency? Ariana?
Definitely. Yeah, I mean, I think, it's certainly something, it's hard to say today. It's definitely something that we are keeping an eye on and certainly a sort of data and pulse on that. So, that could be tabled till maybe our next webinar when I have a little bit more information, but a little too early to tell at this point.
I will tell you, I started in the industry back in the late 90s when separate metering was really starting to come to the forefront. And what the data showed was that moving a property from unlimited utilities, whether water, electric, gas, whatever, to individual metering lowered consumption from 30 to 40%. So from a green perspective, I think that, when a consumer knows exactly, that what they consume is what they, what they're going to have to pay for, again, just the pure economics of it, that really is the better route to go, because nobody, the cost, the person who cares about keeping that thermostat when they live in Phoenix at 82 in the summertime instead of the person in the unit next door who's at 62, because they know they don't have to pay a utility bill directly, that kind of creates a very not a good dynamic. So I actually think that what I think that individual metering and that to me is really the way that it's going to stay for that reason. But I do think that owners and operators want to embrace green and efficiency where it helps them lower their operating costs. And I saw that I spent a great deal of my career working for Equity Residential, very large apartment REIT, and our whole sustainability program was mostly focused on trying to lower our operating costs in the common area, whether it be the parking garages, whether it's the lobbies, whether it's the other amenities space, putting in LED lighting, redoing heating and cooling to make sure that we were being as efficient as possible, et cetera, because the return on investment on those types of things was actually very high. And I think that and especially today, because expenses have really ballooned in most operating environments for multifamily, that'll continue to drive a lot of that investment because the ability to lower the energy bill for a building is got to be very, very high on any owner or operator's list.
Yeah, you're absolutely right, Jay. That's a huge focus for us in terms of, how we're operating. And wherever, we can input energy efficiency or use that to our advantage, it helps, and it's every little bit counts.
And would you say that the energy efficiency is as big of a cost savings as just operational efficiency? I mean, it seems like labor would still be probably a bigger driver of cost, right? So maybe prioritizing the types of upgrades that, like Daniel said, kind of reduce the pull of the management team.
Yeah, it's looking at sort of, the entire asset, understanding, certainly what the strategy is, and then being able to use the data to drive those decisions is very important.
With the time remaining, I would love to talk a little bit about kind of how to understand what is happening, right? What are some of the data points that maybe our audience could look at and consider to understand their particular market, right? I know that every market is very different. Just kind of interested to hear from you all what maybe some non-obvious data points are that could maybe help track kind of the health of the multifamily industry in their particular markets. Daniel, I'd love to start with you with this one.
Yeah, I don't know that I'm going to be so good at tracking the data from a market standpoint, but maybe I can offer some ideas around how you might track it on an asset standpoint or an operational standpoint or investment standpoint.
Yeah, absolutely.
So what you have, I think, in our view in multifamily is you've got now real-time operational data, and access to that, I think, can inform so many decisions up and down. So from an individual property level, so you've got now managers who have dashboards to show what's happening at a pretty granular level of detail, right? So like how many people are going through what door, or in our world, if there are things that are triggering failed access attempts, and whether there's something wrong with your property, whether when residents are coming in and out of spaces. These kinds of insights now can give you a pretty clear picture of building usage and security potential exposures. And you can spot problems early and you can operate them more efficiently, right? That's a big part of what operators now have to deal with. But I think that there's also a lot of value in the contextual data, I guess, that these systems can deliver. So we were talking about amenity spaces. You've made a intentional decision to put certain investments in. Are people using them? Are they not using them? How are they using them? How often and for what purpose and what time? So that you can better track that and match that up against the way that you're resourcing it. If you're an owner at a portfolio level, you can learn from that asset to asset and understand where you're going to deploy those investments into the future. Or just the basic tracking, like how many visitors are you getting? How many people are going through your spaces? All those are just different things that day-to-day people are using all left, right, and center. And by watching this, you got a pattern for how your building, how your community is being used, and then to be able to design now your space to match up with the way that people are using it, but also to match your variable resourcing, property management, your staffing, your maintenance, all of those against how people use it. It just allows you to be a lot smarter, I think, than you used to be. And I think a lot of people may have this kind of data at their fingertips, but they're not calling it up from our experience to really inform decisions that they are making all of the time.
Yeah.
And there's a lot more to it. And I think opportunity, sits ahead from that standpoint.
Yeah, I mean, and that's proprietary data, right? That's something that you aren't just, one of the crowd looking at, right? You actually have access to some data that others don't, right? So it could help you maybe make, better business decisions.
Yeah, absolutely. And at the end of the day, it is an ROI, NOI thing, right? So for the stuff that we are investing in, for the amenities that we are building, for the people that we are deploying, how can we generate more return or maximize the return for the resource that we're putting against X objective? And with the data collected through whatever systems you're already operating today, how can you draw from those insights to better operate that one asset or that one community, but also make smarter decisions on the next community that you're building?
Absolutely. Jay, have anything to add?
I go back to that supply number. We right now are seeing the perennial tortoise markets, the Midwest and the Northeast, be the best performers right now. And when you look at the supply additions that those markets are seeing and have been seeing, they remain close to the levels that they were seeing pre-pandemic. When we look at the markets that are currently underperforming right now, the South, the Sunbelt locations, these are markets that are seeing supply at levels well above the numbers that were posted pre-pandemic. And so, it's just this, the supply and demand, we always come back to it. We've got oversupply in a lot of major markets. Everyone loves to talk about the demand side of the story. They're like, oh my God, all these people are moving to Phoenix, all these people are moving to Nashville, all these people are moving to Florida. But the analogy that I came up with recently that I think is a really good way to say it, it's great to talk about those demand drivers, but when the supply is far outseating it, it's kind of like being a 7-foot tall person in 9 feet of water. It's great that you're 7 feet tall. You're still going to drown.
Great one. All right, Ariana, take us home here. What do you think? What are some of the metrics that you're looking at?
I think first and foremost, it's just crucial to understand, really understand the local market where the property resides. And from there, I think you build, harnessing some of the analytics, that technology, that data. JLL technology is our friend. It really allows us to build and harness analytics in a very ethical, compliant way, but really understand, how people are living in a market, how they, what their trends are, what they like to do on the weekends, where they're going, and really understand, use that data to help us really drive decisions around rental rates, adjustments, amenities, and really how people are living in the space, not only within their unit, but also, as we've talked about, sort of outside in that community space. What gets them excited? What are they not super psyched about? You don't even have to survey them. They'll tell you. They're very upfront. But it's also, really getting out, having our managers get out into the community and get to know the residents. And we take that information, we take that those analytics, and we apply them to other markets, and then make the tweaks where we need to for that specific asset.
Yeah, I think it's great. The point to leave everyone on is to not lose out on the human aspect of it, right? Like, sure, the data is really important, but having someone on site that talks with residents regularly, that kind of knows the pulse of the community, I think is invaluable. I don't think there's any data points that can really contextualize things in the same way that they can.
The real-time feedback is crucial. It's crucial for us and for our success. And then, as we go and manage and, talk with other developers that are doing this too, it's using that real-time feedback to help guide us in those decisions. Helps us make informed ones as well.
Absolutely. Well, thank you everyone for watching. If anyone would like to be introduced to any of our panelists, please send me an email. It's franco@propmoto.com. That's FRANCO@propmoto.com. Jay, Haniel, Ariana, thank you guys so much for joining.
Thank you so much.
Thank you.
Thanks.
Have a great day, everyone.
Bye.
Bye.
Bye.